Good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, June 6th, 2022. Again, not a lot to be adding to current analysis as we basically have not broken out of the range that has been, developed over the last 4 or 5 sessions. So as you can see here on the daily, that's our trading for today. We did start out well. We did a nice rally up. Looked like we were going to start heading for that 12,900. Got a little bit above 12,800 and then died. So nothing really to be adding. Everything basically remains in place as we await what the market is going to be doing here. Now, I continue really to favor that we have additional upside to do. That does continue to seem to me what the plan is. And again, today, if you remember, part of what I discussed yesterday was that, well, maybe we're still in that B wave, which still leaves open the potential that we will drop first down to 12,382-ish. So, but we don't get there because, to be honest with you, the 4 and the 8 continue on the daily are very strong, and they're supporting all efforts to sell it down. And they're not being able to break below both. And now they're joined, as they say, at the hip. You can see the 20 and the 4, the 20 and the 8 are together at 12,503. That's where they sit. Now, what can we expect from here? Pretty much the same story. Looking for the market to complete this B wave. And again, if I go down to the hourly now, the market itself, that was the completion point, in my opinion, of the A wave. Then we get a nice A down. This didn't turn out the way I thought. It resolved up. So it was a triangle pattern that actually failed and then ran. So again, what I was thinking in terms of maybe this was the A and then we got the B. And so that makes sense, doesn't it? We get an A wave down and then an A of B, a B of B, and then the C wave. So within this internal B wave, we've got the A, the B, and now we're working on the C. Now, if that's the case, I'm just going to put this out there for discussion because these are now going to be possibilities. Let's run the fibs and the extensions for what could possibly be a C wave. Well, definitely we'd be looking for the C wave to come down and break 12,503, which was the low from last Friday. And so I continue to look at that level to complete a C wave down and then complete that a little bit larger B wave. So we did wave A of 2. Now we're still within that internal B wave. And inside of that B wave, looks like we've done A and B, and now we're going to finish up with the C wave. And if that's the case, I would look at this as a 1, 2, oh no, here we are again. We may just sit in this little territory for a while. There's a lot of indecision in the market. There's a lot of rush to get in, rush to get out. And so not the easiest of trading because then again, corrective patterns or counter trend patterns are not the easiest to trade because they can come in so many different forms and form so many different types of structures. There's 2 basic forms, that being the zigzag, which would be what I think this B wave is going to be, a 5 down, 3 up, 5 down, or we get the other form would be it's a flat. And that would be, where the A and the B kind of come in the C wave and they're all within a range. So it kind of is like a flat ABC. And that's the other. And so this appears that it will be a zigzag. And so that would suggest that we have a really good chance of getting down to 12,368 sometime between now and likely the end of the week or midweek or whatever, and then putting in another C wave up. So again, I don't really have anything to add other than we need to trade this every, day by day and play the moves as they're out without getting involved with bullishness or bearishness, and leave that up to others because we're just trying to trade what's in front of us. That's going to be the ticket. I think most people that are actually listening to the updates are day traders, are short-term traders. They might do swing trades or whatever, but they're not connected to needing this massive rally to pick up and carry things up to very high levels. In any case, let's just kind of figure that our moving averages still very much in place to go down. And here we have the inability, the 20 is flat. This is all last week. And look at the 20, flat as a pancake. That's why we're really not getting anywhere, because it continues to hold it as support. Now we've got the 8 joining the party. Now, if the 8 breaks above the 20, that should give a little bit of a boost to the buyers coming in on a somewhat positive note. And then we're going to be looking for, the 4 is already up here. So look at this. We did get up, but look what happens. It comes back down and closes right at that 4. So we're still back in the range where it's trading between the 4 and the 8. So we got to get through all of this. Looks like we're going to go down complete, not all the way down. We're definitely not looking for new lows. Possibly right there. That's about it. I'm not necessarily even looking for an extended slide, not at this level. Should that occur, then I'm going to go back to what I was talking about before, that this point at 12,945 may have completed that minor wave 2. Oops, let me go over here, go back to the hourly and go back out to the daily so I can show it cleanly. That we'd have to work it to see where this high at 12,945 may have been the C wave, and it didn't really get that far. I don't think so right now, but if we continue to drop and we start breaking all of these levels, then yes, I will consider that the minor wave 2 is over and we're dropping in the beginning stages of a minor third wave. We all know that story. Third waves, and here's how we will identify it. This is what I think is important. Instead of me just calling it, saying a minor third wave down, I want to tell you what I would be looking for. Number one, to confirm that it is the third wave, and to actually start to count it out. Now, that third wave, even on a minor level, will be consisting of 5 waves of minute degree. So remember, Elliott wave are building blocks. So no matter what direction we're going, we need to realize what we're counting, and then we need to realize what sits inside of it. So we're coming down in an immediate degree, third wave, and within that, that's going to be 5 waves of minor degree, of which I have put minor 1 at that 11,491 low. That puts us in a minor wave 2. After that, minor wave 3, then we get a minor 4 counter trend bounce, and then we get a minor 5 down, and that then completes the intermediate third wave. And then we get a good intermediate fourth wave bounce, which will be an ABC. So yes, we are constantly moving from trend to countertrend, trend to countertrend. And it seems that the trend moves happen very quickly. But I ask that we go, and if you're feeling that way, take a look at the weekly chart. We are coming off of, starting on April the 4th, or in April, we are coming off of 1, 2, 3, 4, 5, 6, 7 down weeks. So we need to have a counter trend rally of at least 3 to 5 weeks. So that's why I'm still looking here. Now, should that not occur and we break down from here, it's going to really be telling us a very serious message. And that message is that this minor two may end in failure. It fails to go up to an area that is expected. And that would tell us on a weekly basis and on a daily basis of the serious underlying weakness in the market. And that's going to be an important message, because we have a lot of input coming from pundits and from a lot of people talking about all the things the Fed's going to do, all the things that they're not going to do, et cetera, et cetera, et cetera. It is truly if and not when and not then and anything else. It's speculation, but the speculation catches fire and people take it as gospel because they heard it on CNBC, or they read it in Barron's, or they read it in Investor Business Daily, et cetera, et cetera. And as someone once told me when I was doing a program, and it was just a market update type of a program, and they kept asking me, what if the market were to go here? Is that possible? I'm like, why are you asking? Why are you presenting a misleading story? Why are you trying to tell me that? And basically the answer was that the truth doesn't sell airtime. And that's okay. People do what they want to do. But we had 7 down weeks. Having 3 to 5 sideways to up is not unreasonable. So therefore, based on that, I continue to look at the markets as being, or the NASDAQ as being, in a minor wave 2 counter trend rally, which should ultimately get itself back above the 382 level, which is at 12,934, and continue to go and break above 13,000 by getting itself above the 50, the daily 50 moving average. Ultimately, waves 2 are most commonly finding their resistance to complete between 50% and 618. Those levels are 13,380 to 13,825. Now, we already discussed yesterday how the anticipation now coming up for that June expiration out there on the 17th is that it should settle out $3.6 trillion worth of positions. That's huge. That's a lot that's going to settle. Still unclear as to, should it be working its way higher, working its way lower, what levels everybody's going to need for it to all settle. I'm going to say, because of how I see the market right now, I think it settles higher. So I would continue to be looking for upside, at least for the balance of this week, if not next, until the market tells us different. And the way that they're going to tell us different is they're going to break down below these moving averages and these support levels. And they'll start heading, or the NASDAQ will start heading for 11,491, and the S&P will start heading for 3807. We have plenty of support underneath it. And it would, again, continue to be within line with the counts that we have. But the fact that I've moved this minor down to here really opens up a lot more downside. But this on a daily chart looks a lot bigger when now for all the completing waves. But that could come out. There are many times I've seen in the past where the first wave was the longest, and wave 3 coming in second, and wave 5, excuse me, them being the shortest. So we still have to let this all play out. And again, using alternate views, et cetera, et cetera. More importantly, let's focus on what should come tomorrow. What are our possibilities for tomorrow? And so we have, again, the potential to drop down. We continue to hold below the hourly 50 and above the hourly 200. That's the range. And now that's the range for 1, 2, 3, 4 days. And now this is the after hours, and they're holding it up. So this is the start of tomorrow's trade, because we do the after hours, then it moves into Globex. In any case, If it comes down and it breaks 12,536, it's likely going to kick in some more intense selling because it's breaking below moving average. It's basically held for 1, 2, 3, 4 sessions. So if it comes down tomorrow, that's session 5, and then it breaks, and we go likely down to 12,368, finishing the move down in terms of we're looking at that minor 2, and then if we drop all the way down to 12,382, that would be the B wave. So the internal B wave. Internal B wave down to here, A, B, C. There's the A wave. Nice, isn't it? Nice little A wave. And these moves are impulsive because that's a 5, and I'm going to take that this first one down here is a 5. And so we're doing a C wave, and then maybe it ends up down here at 12,368, and then I would say we rally. We rally strongly because then we have a C wave, and the C wave is going to resemble this. And that could just push us right till next Friday, a week from this Friday. So a lot of possibilities here. So I continue to trade using the moving average, continue to trade using Fibonacci. Putting Fibonacci up is not super difficult. I'm using, because I'm looking for a C wave, and that relates on a Fibonacci basis to the A wave. And that's how I get my numbers. The most common support, in this case, for the C wave is that C will be equal in length to wave A, and that's right there, 12,368. Beautiful zigzag. So I am going to leave it there. I now talked about if we get down to there, we put a C down, and then we're looking for a stronger rally to start moving us higher. And again, we'll start to see it break back above moving averages. That'll kick in additional buying. But if it continues to break and goes beyond that, then we're running the risk of this level completed the minor wave 2. And this would be wave 1, wave 2, and we're dropping in the 3rd. So that's the story. If we just come in and we don't stop and we just keep going, then I'm going to say that this completed the minor 2 and we're in that minor 3rd. And we know what the balance of that story will be. And how that fits into the overall pattern for June expiration, we'll see. Continue to trade what's in front of you. Continue to trade what the price action is telling you for that particular time in the market. And so again, I don't necessarily day trade off of my hourly chart. I day trade off of a 1 minute, a 2 minute, and a 5 minute chart. And when we're in trend, I sometimes will drop that 1 minute down to a 30-second. And so I'm going to leave it all right there. Not much to be adding. We have our upside. We have where resistance is going to come in. We have our downside, so we know where support's going to come in. Continue to work with the moving averages. If they continue to hold, keep an eye on them, because as they get flat, they become stronger support or resistance. All right. I'm going to leave it right there. Our next update will be on Tuesday, June 7th.